Mm. Good morning, folks. How are you? Hope you're doing well. I'm checking X to see if you guys can confirm my audio. So, I just heard myself, so you should be hearing me okay. And I remind myself to make sure I don't go past an hour. So I have to be off here by what's that? 8:55. We'll call it. It's a macro time. So, anyway, I was sitting here looking at this micro e-mini Nasdaq. I was watching this run here, and I want to see if it can get down to this level, 24,485 half. And, we just kissed that fair value gap again there, but there's minor sell side here. I watched these small little minor sell side liquidity pools, and this level here is consequent encouragement of a wick. So let's go through the whole bit of business of dollar index, euro dollar, pound dollar, gold, silver, crude oil, ES, and Dow, and then we'll look at Nasdaq in a little bit more detail, and I'll kind of like review some of the things that we were talking about on Twitter or X last day or so. I was waiting for my wife to go to bed last night, by the way, and old man ICT fell out, so she ended up staying up longer than I did, and I fell asleep, and she just let me sleep. So that's what happened. But let's see if this thing wants to reach down here and take that sell side and get to that consequent encouragement. Just know that I'll show you what this level is in a moment. But I want to see it accelerate below here and take that sell side there. Guys are taking trades based on what I'm saying, and I asked you not to do that. They know. When I do that stuff, you don't know if I'm setting you up or something. Hmm. Some good water. So how are you this morning? You good? You healthy? Everybody well in your family? Did you sleep good last night? Every day above ground is a blessing. I know there's a lot of folks right now that have all the reason in the world to have grief and complaints. My prayers are going out to them. I can't personally do anything to stop it, and it's unfortunate, but this world is evil. All right, so we got the sell side run here, and below this low, what measure of targeting could we use? Well, when you have an actual low, and then you have a consequent encroachment. Again, I'll show you what this level is in a moment. You can do event horizon, which is like take that low here, draw a fib down to that low. You can see it actually hit that there. So it's probably random. Yeah, bro, but the move already started up here. It was already here before it got there, so that was not really a good call. It's just like we don't trade on FOMC, and then the replies were, yeah, and they don't trade on TGIF either. These guys, it's pathetic, but it's so funny. But anyway, now that you saw that, and it's always, oh crap, it's supposed to not be there. We're supposed to be only doing. Let me fix this. Oh my goodness, good grief! What am I going to do here? Gotta hide that stuff. I don't want anybody thinking I'm a introducing broker. I'm not. I'm not an introducing broker. Good grief! I almost exposed myself. How embarrassing! Good grief! All right, so let's go to dollar index. All right, and then we're going to go out to a daily chart, and this is going to look a little mucky when we get into the other time frames and other markets because my annotations were quick and dirty yesterday. I was literally trying to rush to get things done, and because I don't really care, because when I'm trading, I take most of that stuff off. I only highlight whatever it is I want you to see at the time when I'm doing the analysis. What PD array is important at that moment? That's what we're looking for. So the dollar index I gave you a couple weeks ago. Told you that we would be moving higher. And then I told you this particular candlestick here, I like that. Now, I got questions as to why did I pick that? Like, why this and not something like that high there or that high here? Something to that effect. Well, if you look at all of this from high down to that, go to the left. What do you see? You see any inefficiencies here? Not on the daily chart, you don't. Okay, you don't see that. But what do you see? You see this really prominent discount wick. See that? Just widen it out a little bit. You want to grade those. What would this act as? If price is below it, like it was over here, you're down here, it's going to trade up to it. So these levels here, that's that discount wick that's being graded. So here's consequent encroachment, the midpoint. And then there is two levels, green basically. This candlestick's open. So look at this price up here, upper left-hand corner. 1,537. And then you have, I'm going to take this little red line thing off here, okay? So that blue line there comes in at 1,000.527. So it's very, very, very close to that opening price. So I teach you open, high, low, and close. That's predominantly all you need. You don't need anything. You don't need any other kind of gimmicks. Okay, you don't need that. So we chose that candlestick's open, and then we saw price go literally right to it. 100.54. So that's it. And we had this little bit of consolidation. I personally don't think that we're done with the dollar index going up higher. I don't have a target, to be honest with you. Like, I don't know where it's going to go because of all the wartime stuff. I'm just staying with the narrative that I think it's going to go firm to higher. And the only thing I would counsel you to do is have these levels on your chart to watch. So this short-term high here and its consequent encroachment. So midpoint of that high problem that we're probably going to be met with unless something really kicks off, like something like thermonuclear, which I've already told you years ago. If you were a paid mentorship student behind the paywall in 2020, I told everybody in that setting, which I don't host anymore. I don't do anything with it anymore. The idea of it as a potential for a nuclear exchange, and one will be dropped in that little place in the Middle East that everybody's angry at right now because it's biblical. It's going to happen. 38, 39 of Ezekiel. You might want to read that because that's what the headlines are going to be talking about soon. But this engagement here between this volume of balance low, that candlestick's low there, you can see they already used that with this. So that it's pretty much what we're fighting against. This is that right there. And we'll just extend that over to the right. Mm. So once we get into this area here, it may get a little choppy, a little lethargic and trying to get above that. So just be mindful of that. So that's what I'm saying. I don't have a hard target except for every day I'm going to watch and see if it continuously goes higher. These environments that we're in right now, these are all learning experiences for me because they are fraught with a lot of curveballs, a lot of heavy manipulation, a lot of time distortion. There's a lot of things that are going on right now. And that's not them changing the algorithm. That's just simply them being in there with their own hand, you know, tinkering with it, manipulating it. And I think when we get into the month of May, when Trump's hand-picked Fed chair gets in there, I think we're probably going to see some loosening up of the marketplace. It'll loosen up, I think, before it gets there. But I think once we get into May, you'll see a difference. Let's put it that way. You're going to definitely see a difference in what the market's doing because they got their good old boy in there. And I'll just say it like that, okay? And then we had this volume imbalance in here. We traded down into that. I talked about this as an immediate rebalance that day. And then, would you know, it went right up there, hit our target, and then we pulled back and consolidated. So when we traded down here like this, by it getting very close to this volume imbalance but not getting into it, I'm going to contribute that to or associate that to um, underlying strength. So unless we get down below this volume imbalance and go below and come back up, if it did that, then I would expect it to be inversion and then run for the liquidity here. But as long as we're above this volume imbalance, I'm expecting it to go higher or at least stay firm and consolidate without going lower. So gun to my head, I'm explaining to you that I am not bearish on dollar index. So that means I'm expecting lower prices on euro, lower prices on pound dollar. Okay. So that should be enough discussion for dollar index, you Forex freaks. So let's go over to euro. All right. So here's the euro dollar. Don't worry. I'm going to tell you what that consequent encroachment level is on Q. You left and never told what that level was. Henry. So there's a sell side liquidity pool there that it's yet to be traded to. I told you about this one first, and then if it gets below that and gets animated, we would look for that one. And we had this fair value gap here. I mentioned the last time we talked about it. and then we traded up into it. Notice the bodies. See that? Let me let me build this up a little bit so you can see it. I wish there was an easier way to do what I'm doing here. I like to be able to zoom in a little bit better. But here comes 20 different emails. ICT, I saw your live stream. This is the tip. Did you want to just send it to me on X? Everybody will benefit from it too. All right, so we have the low of this candlestick to that candlestick's high. Now, if you look at this candlestick right here, look at its close. It's 1.15119. So this open is the same price on this candlestick here. So close of this candlestick and open, so there is no volume imbalance. So that's why we're using that wick high, that wick low. Now I'm measuring this. Here comes your chance to see the fibs. Okay. There's your settings. These are the octants and the quadrant levels. Okay. See where the bodies are? Below consequent encroachment of that wick. That to me indicate that we have a high probability of continuation to the downside. It didn't close that gap in. Okay. We're not Chris Laurie around here. We want to see the gap stay open. Trades lower. There is sell side liquidity resting here. And then we have another pool of liquidity resting right here. So watching this wick here today, watch this wick because we were below it here at open. We traded up, traded right into this wick. We want to see this. In an ideal world, perfect scenario, we don't want to see the body laid above that. Can it do what it did here? Trade above it? Sure, absolutely. That's permissible. But we don't want to see the body be left above that. Because if it does that, then it weakens the strength signature that it gave by not having the bodies at or above consequent encroachment of this wick. That's real order flow. Okay. That's how you can see it visually. You can see what they're doing. These are footprints. You want to talk about footprints and you want level two and you want to go inside the candlestick and look at how many people bought here or sold there. None of that stuff is valuable because it's already happened. It's already happened. That number of buying and selling has absolutely no bearing. Zero. If you're going to argue semantics, how is that any more beneficial than me looking at a level like this where this has already happened, but I can see it visually? I don't have to have any complication of determining what range of price action, where do I put my volume profile, where do I anchor to, where do I begin, where do I do? Everybody's got a different, look at volume profile. Everybody's got a different spin on it. Everybody has their own interpretation of it. So which one are you going to use? The person that's going to sell you the course right now that said they just made this much money or that much money? Come out here on price action and call it every single day. Don't say anything more. Just this is what I'm doing. This is the rules I'm using. I'm looking for this and then do it. I have never seen a conglomerate of users of volume profile agree on how they do it. Now, in my book, I've decided to add a chapter on how you can use that stuff correctly. I don't use it, but I'll help you decode when to use it the right way. And you don't have to thank me either. So we're looking for lower prices if the body stays below this, okay? It's already done enough here, and now we want to see it explore and work towards this level of minor sell side liquidity pool, okay? And let's zoom out again. And then we'll look at, it's a little too much, Michael, settle down. All right, so there's that pool of liquidity there. Okay, so it wouldn't take much. It literally could happen, before the close of this week. I mean, it's so much happening, so much volatility. It could use this whole day here and then snap down there, and then there it is. It's done it. I'm not saying that that's all there is in the cookie jar for it. I think if we get below that, we might see a little bit of exploration lower. To what degree, I don't know, but I would compare it and contrast it with the momentum that would be seen in pound dollar. All right, so let's go over to that. GBP USD, or as we commonly refer to it as cable. All right, so I gave you this buy side balance, sell side efficiency, and I mentioned how I felt that over time we would graduate down to this sell side liquidity pool. That's what I'd like to see it, because it kind of looks like what? It kind of looks like a market maker sell model, right? But we are met with that point where if you studied my mentorship content, there is a playlist for 2016 private mentorship and 2017 private mentorship. That is the actual one first year of mentorship. It bridged from September of 2016 into August of 2017. And then that was a full mentorship year. That was the very first year. It was the first year out doing it. And that content was the same content I was teaching every time a new group of people came in. And people were always emailing me all the time, can I be a part of your mentorship? No. Okay. I don't do anything with that private group. I left the community to them. They're all having their conversations amongst themselves. They'll tell you the truth. I don't go in there. I don't teach anything new because it was exploited. It was leaked. It was repackaged. It was sold. So that's why I came out here publicly, and everything I'm teaching is for free. So please stop asking for paid mentorship because I don't do that. But if you learned those lessons and lectures that are on my YouTube channel, you know that a market maker sell model can become where it retraces back down and stop. And it may not go down, but this is where I may be wrong, is what I'm saying. The original consolidation, which is this, that's the sell side. That's what I'm mapping out and saying. I think and I believe that that's where we're likely to go. It's going to take a little bit of time to get there, but I think that's ultimately where we're going to go. As long as the dollar's firm, that means it doesn't drop or goes higher. Now, the dollar index can consolidate, and this can still drop to trade down there. Okay, so that's why I said earlier when we were talking about dollar index that I believe that it's going to stay firm to higher. And that's what I meant by firm. Firm means it's just going to stave off or refuse to drop with any measure of significance. And then that frees up the foreign currencies to extrapolate to the downside against that firm or consolidated dollar. So that liquidity is here. But let's say I'm wrong, okay? It could stop right in here. And cable could say, I'm not going to go any lower. And that's why I have this level here. Because if it can't get below this and then treat this as inversion fair value gap, while I'm still expecting it to go lower personally, but that's my commentary. That's not a trade advice. It's not a suggestion for you to get short pound dollar. It's just me giving you my interpretation of this particular currency pair. I believe it's likely to go lower. So therefore, what am I going to use to frame that? Well, it's got to get below this buy side and balance sell side efficiency. If it's bearish and it's going to draw to this level as my opinion, then it would be ideal for it to get below it, trade below it. And I don't have a freehand drawing thing, so we'll just do it crudely. Let's say it does something like this. It goes down, and then we would want to see something like this. And then not straight like that, obviously, but overall, that's the kind of idea I'm looking for, okay? If it comes back out of the low of this here on the bodies, and it has some closes below it, that validates this as a potential inversion fair value gap. Then the next point is it has to be given the permission, okay, to get up into this and try to touch the midpoint. If it wicks there and then the bodies close below that midpoint, that's validation, that's confirmation. And then when and if it ever trades back out below the low again, the very first fair value gap or touch of that is a wonderful little entry mechanism for you to get in your demo short. Demo short, paper short. Okay. It's not a trade device. It's not for me to sit up here and try to tell you when to get in with your real money. Okay. I'm just telling you that's how my inversion fair value gap works. Because we've already done the work of being up in here. And if we leave it by going to the low and close below that, that turns this buy side and balance sell side efficiency into a inversion fair value gap. So that means in an ideal world, we want to see price stay out of portion of this buy side and balance sell side efficiency or anything above that midpoint. Okay. So that's why it's superior to supply and demand. That's why it's superior to support and resistance. That's why it's superior to everything, because there's a very specific rule-based idea that we're waiting for. Just simply because I draw a rectangle on here and I color it orange doesn't mean that it's going to go straight down from there. There's things that have to happen. I just tweeted about a goober I saw. And it's like, if you're gonna talk about me or my concepts, first learn them, okay? Because if you don't know what you're talking about and you come out here and you say something silly and you think you're taking a shot, towards me, that's not a shot. You're tickling my ass with a feather because there ain't no way that stuff is hurting me. It's not hurtful. Nobody in my community sees that as a valid argument because it just proves that you have no idea what you're talking about. But it is comical and it's fun. It's entertaining. Please don't stop. So that's the business we're looking for pound, dollar, or cable. I just did fiber, which is Euro USD. We did dollar index. So let me make sure I keep track of where we're going here. Bitcoin, let me just toss that in because I wasn't going to do it, but I want to show you what I did wrong here. What do you say? Yeah, put it on your calendar. Put it on your calendar. Today is March 19th of 2026. ICT called something incorrect about Bitcoin. What? Yeah, how about it? So anyway, what I did was I originally had this here, and I was saying how I felt like that was enough to then send this lower. And then they pumped it one more time above this high here. So I think what I was looking for back here at that high there, I think this is a much better interpretation of that same idea. Okay, so I'm still expecting Bitcoin to give up the ghost and go lower. Um, there's the sell side, and there's my target. That's what I'm looking for. Now, obviously, if this thing starts to really sell off and go after that guy Sailor's broadly mentioned threshold for which he can weather a storm going lower, which was absolutely stupid in my opinion, because now you just put a big old bullseye on that. Okay. You're basically daring them, take all my money, bro. Okay. So anyway, the liquidity there, and then we have this. Let me scrub over here and show you that pool of liquidity there. So there's sell side there. So this is minor sell side. This is much more prominent sell side. Now, whenever we have two of them like that, okay, here's where you can do my event horizon. You go to the low, to the other low, right there. That midpoint, that's event horizon. Okay. Now, depending upon how astute you are with reading price action and trading and your level of conviction and what you believe price may or may not do, you can use it for an entry technique. You can use it for a partial, which is many times what I do. For instance, because I believe it's going to ultimately go down here and lower. So therefore, if and I'm not, let me preface it by saying I have never traded Bitcoin. I've never traded crypto, but a lot of my students do. And I have millionaire students that actually made lots and lots of money doing it, not because I helped them do anything. They just learned the concepts and they applied it. And that's their results. I never say that crypto results are a good measurement or a benchmark because I personally never traded in them. And I hope that the community can take that measure of honesty because I'd never had an interest in trading it, and I still don't. Like I don't ever want to trade this stuff. But when I get a barrage of emails and so many comment section requests of all my videos, they'll say, "Can you please talk about Bitcoin? Can you tell us what you think's going to happen in Bitcoin?" Yeah, I do it every once in a while, and for the most part, it's you know very intermediate term analysis. So I don't want to go in there and do like intraday stuff, small little 1 minute. So I don't consider anything like that any interest. So it's just I do it. You're all going to want me to do it more, and I don't want to talk about this market. Okay, I don't because it's silly. I don't even think it's real money, but you're about to find out. It's going to happen. But this, if it accelerates and takes out that low, and say for the sake of discussion, let's say ICT was hypothetically short Bitcoin. I am not in Bitcoin. I've never traded it at all, ever. I've never had it. I wouldn't even know who to begin going back before they put it on a futures contract. I wouldn't even know where to start to trade it if I wanted to back then, and still don't today. I wouldn't touch it. I wouldn't trade it. And that's just my opinion. You may do whatever you want to do with it and make all kinds of money. And if you did, wonderful. Praise God for it. I'm personally saying to you that if I was hypothetically short, the way I would use these levels would be if I had room or leverage enough, position size enough, I would take something off right below that low because I could be wrong or could be wrong. I mean, I was wrong about that. And if I was short, that would have stopped me out. There's no pain in me saying that kind of stuff, folks. I don't know why you guys pretend like I'm out here trying to pretend to be right 100% of the time. Sometimes I do get it wrong. And in this particular asset group, I have seen it fail in my own interpretations many times on an intraday basis. So if I can't get a good read on intraday, back when I was looking at it, I'm not interested. Like I'm not interested at all because it doesn't carry all the signatures I'm looking for. Now you might come and say, "Look at this ICT. Please don't send me your charts. I'm not going to read them." I have so many people get mad at me all the time, saying, "Hey, look, I sent you 15 emails and you don't respond." I don't have time. I really don't. I don't have time to get to everybody that sends me stuff. So that would be an area where you can take a partial. Then you definitely want to take something here. And then because this level is midpoint between that pool of liquidity and that larger pool of liquidity that I outlined, this would be a wonderful place to take a portion of your trade off. Now, let's say, for instance, because this has been in a protracted run lower for months. If you go back here, look at this shameless display. Here's why I'm saying it's going to go below 100,000. Just be careful, okay? And we went lower, and some guys were coming at me when I posted that. Oh, it's probably going to go down to 99, then it's going to go up to 150. Okay, well, it didn't do that, and that's why I'm saying I only post commentary about this asset class because I don't want people getting hurt. It's mania in this stuff still, and whenever there's mania, just like silver, we're going to get to that next. It can hurt you. Okay, when emotions are high, they know that you're not going to think clearly. They know that you're going to over leverage. They know you're going to overtrade. They know if you get burned on a small little losing trade, you're going to try to get it back, and that's how they'll get you. Well, here we've been moving significantly lower for months since last fall. So there's your high, and this is where we're at now. And yes, we're at the low portion of that range from here to here. So we're long in the tooth, if you will, meaning that we're part of a run that's been really well established lower. So because of that, it would be good to take something below this low, and whatever your position size is, take about 25% of the remaining portion off when you're at event horizon, something like that. That's how I would do it. I'm not in it. I'm not saying you should do that, but I'm answering questions because they're always posed to me. And then I would let the runner reach for the rest. Because what that does is it frees up this portion from this midpoint between these two lows. In case you came into the stream late, I'm measuring that low, that sell side liquidity pool, and this low, which is below that, is sell side. So whenever there's targets that are converging below price action, if I'm bearish, I'm going to look for where I would stage my exits. So there's got to be an extraction point. And at what degree, how much am I going to take off? That is left to you. But because we're in such a long, drawn out, you know, move lower, this right here I would interpret that as a wonderful area to take 25% of the position off minimum. It may even be more, okay, in other circumstances, but in here, that's how I use it. And then the balance would be just simply reaching for this, okay? Or you can take um, everything but the last 20% off below here and then leave that remaining 20% of the original position you assumed when you were shorting, leave that 20% running to see how far it can go down. And that's just one way of using it and how I interpret event horizon. And this is a targeting strategy with it. I've used it many times without your awareness of entering trades and adding partials to an existing position. But I'm always using highs and lows when it's drawing down to it, or between highs and a higher high, midpoint of that. I'm using that as a partial exit if I'm thinking I'm near the end of a run, or I'm adding to it there. And you're thinking to yourself, well, aren't you buying at a premium? No, because this is a level that would become. I mean, explain what I mean by that. Say price goes lower, and don't get discouraged because I'm talking about Bitcoin and you don't trade Bitcoin like me. I don't trade it, but what I'm outlining here is universal. It's not like just a Bitcoin thing. It's not just a futures thing. It's an every market thing. Okay. So it's a universal application. Let me teach you something, youngins. So let's assume that the market trades lower. We get below this low. Next point of business would be halfway, which is consequent. I'm sorry, event horizon, which is a consequent encroachment measurement between an old low of that level and that level. So midpoint is right here. If I ultimately believe and subscribe to the idea that we're going to go here to that low and lower, and price trades down below this low and trades down to this. So in other words, this is say it does this. Once it breaks below here, who cares what the mechanics were up here? But we finally get below it and we trade down from that low to here. We can dilly dally around in here, but ultimately, if we trade down like that, in my mind, if I'm assuming price is here as a target or a terminus or even lower, which is what I have really made very clear, I think it's going to zero. Laugh at me, do whatever you want to do. I don't care. But ultimately, you will see a day where you're gonna see it and like, what in the world? He was right. Just the timing's off. That's why I don't trade it. See, but I ultimately know this is going to go down to zero. Nobody's going to want it, and they're going to do a Luna on you. One day you're going to wake up and it's just going to be like zero. So the market trades down to that event horizon and then goes back to it there. As soon as it does that, in my mind, all we're doing is trading at a premium. Wait a minute, how can that be a premium? Because you just showed us on the daily chart, and then we're from here all the way down here. How's that a premium? Because the range resets. Because we broke this low here, and this is terminus. So if this is your range from low to lower low, and this is your target down here, the only thing we did was went down into discount and then right back to equilibrium, midpoint. So consequent encroachment defines that level as what? Go back and watch Elements to a Trade Setup, month 1, 2016 playlist. Discount to premium, premium to discount. When we're bearish, if price goes below the midpoint, which is equilibrium, if we trade back to equilibrium, that's a short-term premium weighted towards the sell side delivery because it's bearish on your interpretation or analysis. So that's why it's don't get tricked into thinking that simply because there's everybody talks about it in terms of discount and premium now. And sometimes when they draw their ranges, they determine what it is they think is discount or premium. It really isn't. And sometimes they'll say, "I don't want to. I don't want to sell short in here because we're too far in a discount." And they don't understand how the range resets when we take lows out that are part of a larger run. This is just qualifying now that now this range is valid. So what's the low of that range? The next pool of liquidity, which is that low over here. Okay, so don't get don't get so crazy about being fearful of taking setups because it's in a perceived in your limited exposure and understanding about what is I taught. Uh, there's going to be many times that you're going to look at this and say, I wouldn't have taken that trade, and look how much it kept going. Why did that work? I'm teaching it to you now. There's so many questions you guys ask, and there's also so many questions I know that I'm going to inspire by my new lectures this year. I already know what you're going to ask, but I also know that you don't need to know that information right now. There's bigger things on your plate that you need to eat. All right, so that's the business there. Just lower prices. Ultimately, just that's the level I'm looking for. 49,577. Okay, that's what I'm ultimately looking for on an intermediate term basis. Short term, we're looking at that low, the event horizon, and then there. And then once we get down here, if we start to really accelerate to the downside, we're back in the 20,000s. All right, so let's go over to let's do gold first, then we'll do silver. You guys still awake? Did I bore you? Did I put you to sleep? Look at that. Oh my goodness. It's almost like this guy knows what's going to happen. I know. Some of you don't want to believe it, but go back and watch the other live streams. It's almost scary, isn't it? I said that as long as we are staying in here, if we go below it and come back up, treat it as inversion fair value gap. We could come back down into here and then ultimately trade into the consequent correction of this wick. And then now we have smooth lows in here. So there's sell side liquidity resting right there. Okay. Now go back. Let's do some time travel for a moment. When we were trading here, I said it would be uncivilized for you not to be taking profit in silver and gold. Everybody else was bullish to the moon. Okay. This is not me. Believe me, I know how to brag. I know how to brag. This is not bragging. I want to talk to you in a way where when I'm taking my time to sit down and warn you about the risks, because all of you want to hear about the good stuff. Get me in a trade. Yeah, tell me how far I can see the price run and make money. But none of you want to listen to me when I'm warning you. Oh, you old man, shut up. Remember, I'm the one that's retired and you're the one listening to me. I'm not listening to you. Okay. So if you're going to spend any time with me, just consider my motivation. Okay. I'm trying to prevent you from hurting yourself. I've done it lots of times as a 20-year-old. I did it a lot. And a weaker person, a less inspired person, a less determined person would have given up. I wasn't going to give up. So, to prevent that stuff from happening to you, because the markets are extremely difficult right now, they're very, very hard, even for me right now. It doesn't seem like it because I'm still calling stuff and it's working out, but I'm extremely dialed back in terms of my involvement. I've been very blessed with the ability to be able to see lots of setups all the time. But just because I see them doesn't mean I'm willing to take every single one of them. So I'm being but much more selective, and I'm counseling all of you to do the same thing. That's good advice. That's maturity. That's worth more than the weight and price of gold. It's wisdom. And I unfortunately probably wouldn't have recognized it either if I had just started back then either. Because I was looking for the guys that were going to teach me how to get into something that's going to move real big. When Larry Williams was teaching, mega trades. Think about the name of that, mega trades. Oh shit, that's the one I want to be in. That's exactly what I want to trade. Everybody wants to be in those Bitcoin runs, those big Coco 2025 runs, and silver, which we called gold, which we called. Okay, so I warned everybody, just loosen up your hold on it. Okay, there's always ways to get back in, but if it's not going to go any higher, it's going to have a deep retracement. And when we get into silver, I'll explain what we're seeing here. The Let me center my chart here. That's a little annoying to me. So here we have the market open at the low of this imbalance. Opens, trades up to consequent encroachment, and then gives up the ghost and goes lower. Sells off aggressively. Why? Because it has a little bit of time. A little bit of time of what? March settlement for silver. This is being led by silver. All of this right here is a smart money exodus, leaving the metals because the tomfoolery that I told you that silver was, under 1980. Look up the Hunt brothers. They're doing the same type of stuff, just a different flavor, just a little bit differently. But there's not enough silver for delivery. Okay, that's what it is. Now, in normal supply and demand factors, you would think, okay, well, if there isn't any silver, that would mean that it's going to go up a lot because if people want to buy it and there ain't enough of it, then we can't take delivery of it. It's going to make it go higher. In a normal market, yeah, but we're not in normal markets right now. We're in level of deception that's unprecedented, highly, highly corrupt. Everything's everything is a lie right now. I don't believe anything. I don't believe anything. And we're seeing that here. Okay. And I told you that this consequent encouragement. Don't take my word for this one, okay? Because if you guys don't watch the videos and put annotations down and record the timestamps where I said it, so that way you can go back and revisit those ideas. Or if you see someone say that he didn't say that, he never said that, you'll have the ammunition to you kind of like not to you need to go out and defend me. It's for you to have peace of mind knowing that I already told you these things. I told you these things so that way you wouldn't be afraid. I told you these things so that you wouldn't hurt yourself. I told you these things so that way you wouldn't be caught blindsided when everybody else was up here expecting the moon. All by myself, I'm standing here. I'm telling all of you, you're all wrong. And instead of arguing and arm wrestling me to try to get some clout, just listen to the old man. I promise you, I won't steer you wrong. I'm trying to guide you and protect you from hurting yourself. That's the first lesson you have to learn. You have to be able to be in it long enough to learn how to do things correctly. If you blow out right from Jump Street, what are you really learning? Nothing. That you didn't follow the rules, you weren't teachable. And that's why there's a lot of people on the internet that have lots of things to say about me. And the only thing they're communicating is they're fucking stupid. They're impatient and they wanted it to be easy for them. And they don't have the time and effort or consideration in themselves to invest in it. So you're lazy, you're unprofitable, and you're a piece of shit. But you got lots of lip service about somebody out here literally doing it for free, teaching people how to be millionaires. My stable has the most millionaires. So just remember that. So there's the next draw on liquidity there. Okay. Now, in a perfect world, we want to see it close on the body below this level. If it does that, then that means we open the floodgates for this smooth area down here with our sell side. If it gets below that, it could accelerate. To what degree? I don't know. Okay. Just keeping in concert with what I already said about this market and silver, it doesn't, I wouldn't want to be long in this. And that's what I said earlier, when we were back here, I said, we're near it. Okay. So you need to be taking some profits, be, be in the profit margin and column saying, I booked some gains in gold and silver. And now if you've done that, look where we're at today. Maybe you were thinking, oh, ICT's got it wrong. I should have bought more. And if you didn't and you took profits, look where you're at right here. Doesn't that bode confidence that, hey, look, listening to managing risk, not seeking profit. Okay, that's the worst. Everybody has a way to do that. May or may not be the best thing, but everybody has a way of doing that. But so little is said about managing risk and interpreting when prices are near intermediate term or potentially long term highs or lows. So you have to weigh all these things out. In the beginning, you're inundated with so many complex theories and struggles to determine what it is that you want to become as a trader and what you're going to focus on. It's put on the back burner. I'll worry about risk when I get to it. No, no. You want to learn it in the beginning because that's your shield. That's the thing that's going to keep you in this battle for continuous long-term success. Without a shield, you're going to die. You're gonna be cannon fodder. You're gonna be blown to bits, dismembered. Your head's gonna come off your shoulders, and you're gonna do it to yourself. You don't feel like it's being done by your own hands, but that's exactly what you're doing because of ignorance. All right, so that's the business there for gold. We're looking for lower prices, and then now let's go over to silver. If you like what you're seeing today, if you're, oh look at that. Oh, there you go. Silver. I told you the same thing. We had a volume imbalance in here. Um, If we trade outside of it, which we did here, we opened, traded up into it, inversion fair value gap. Go back and listen to the recordings, folks. It would trade lower, and we have this wick, okay? And we're just about there, just about there. So we got real close to it. So that low, and we're looking up here in the upper left-hand corner, 67.225, and that consequent encroachment level is 67 old eyes routine. So we got real close to it. In and of itself, by itself, that's enough. That right there, if I would have been warned by a guy that doesn't ask for any kind of money, you don't even have to thank me. Just listen. If I would have got that from somebody, I would be greatly appreciative that it would have saved me a lot of loss, a lot of heartache. Let me put it in perspective for you. From 80, okay, from 80 down to 78 for one contract, that's $10,000 lost if you're long for every one contract you're holding. Let that sink in, folks. Okay, there is no silver to take delivery of. So the people that were holding it to take delivery, what's their incentive to hold the contract? None. They turn the supply and demand factor, the the supply and demand factor that usually would cause a short supply, high price. We're seeing the inversion of that. And there you go. There's your there it is. You watched it live streamed right here. Last time we talked about silver, up here. And now we're down here. I told you it would probably see a quick acceleration, try to get down there and get closer to 50 because there is no silver for the majority of the contracts that are being purchased that they want delivery of. There is none. They don't have enough of it to give to you. Okay. So that's why you're seeing this liquidation. So we had that target met. So the next thing would be is we want to see it close below that. And then we would look for it to work towards these smooth lows here. All right. So that's the business on silver. Give me a thumbs up if you were here and you watched me call this before it all happened and you watched it happen today live. I don't make any more money for that, by the way. I just like seeing it. It just means that you're not sleeping, you're awake, and you've watched it happen because you care enough to invest in yourself. All right, so let's take a crude oil field trip over here. I know this guy does all this for free. Man, I should do a $10,000 mentorship. Everybody's got to sign up with their demo account. It's $10,000 demo paid. Okay, y'all got to start your demo account with $10,000. That's the admission fee. Why do you do this, ICT? I made a deal. I'm sticking my end of it. All right, so here's the business with crude oil. As I mentioned, don't trade it. Okay, don't trade it. I told you that this wick here, we would have to grade that. And would you want to be in this? Knowing what you know about price action, whether it be my stuff or anybody else's stuff, what in this price action right here warrants you entering on anything? I have nothing here that I would want to be part of entering. Do I believe crude oil is going to go higher? Yes. Yes. I believe we're going to have $5 a gallon in places that don't know. I know in California you guys paid too much, but I believe like in my local area we're at like $3.60 some cents. I think the last time I remember looking at it. Um, it may be a little bit more than that. I don't know because I don't really care too much about what the price is. I hate to sound like that guy, but only because I talk about the markets and my wife sees the price and she knows that her friends and family members are complaining about how much it costs for them to fill their tanks up. And some of them bought SUVs. And now they're like, man, I got to put $80 to $100 to fill up my tank. Well, you own an 8-cylinder, you're going to pay that. But I don't think that the average person is ready for that shell shock because what's going on over the Middle East is not winding down. It's going to get worse. And as soon as you see confirmation that there has been tactical nukes being used and that I told you all in 2020 that's what was coming. And they're all talking about using them now. All sides. What do you think that's going to do? That's going to send shockwaves through these markets that you don't fully understand. That's the new boogeyman. COVID, nobody cares about that now. Everybody knows that everything's expensive, the inflation stuff, that's all, we're in it. And it's not going to go lower. It's going to keep going higher. Everything's going to get more expensive. So it pains me to have to keep repeating these types of things. If you can't afford to trade, why are you worrying about it? If you're worried about the markets being taken away from you, say they stop trading. There's lots of things I could list out as to how they could do that. And I know a lot of old timers, even, trading longer than I have, think that what I'm saying is nonsensical. Okay. That's your opinion. I'm batting 1,000 and there is no conspiracy left anymore. Okay. I'm telling you, you will see mushroom clouds inside these lower US states below Canada and above Mexico. You're going to see it. And you're going to see it in Israel. And you're going to see it in Iran. You're going to see it. When that stuff happens, nobody knows what the markets are going to do. I don't know. I have no opinion. I'm out. Night trading. But until that happens, I'm going to be looking for opportunities in markets that make sense. Crude oil doesn't make sense. It doesn't make sense. There's so much volatility now. Options are overvalued. And because of the volatility level being what it is, I wouldn't consider doing anything with it. Nothing. Treat it like a rattlesnake. It's already did what we said was going to happen. It already did it. So just treat it like a rattlesnake. Yeah, it's there. I'll look at you. I'll admire you from a distance, but I'm not trying to touch you because it's going to bite you. All right, so let's go do MES micro S&P. Oh, look at that. All right, so we talked about this gap, including this volume imbalance. We traded up the consequent encouragement on that yesterday and then traded lower, and now we've taken out that shallow run. I told you that this liquidity pool here, when we pierced that, that's not enough. And now we have a little bit more pronounced drop below that. So that's in spec basically what we were looking for. This really ugly price action and ultimately just wilting going lower. This day, today, March 19, 2026, will be a defining day for whether or not this is a sustained price run lower or if they want to go higher. Let me just say this and then I'll move on to the NQ because that's where I really want to be talking about today. And I hope I didn't bore you. Actually, I'm at that final couple minutes. Let me just say this. MNQ M2. If I don't close the stream in less than an hour, it's going to not allow the folks that do the translation stuff. They're not going to be able to see it, and I want to make sure they can hear what I said. So I'll take these off real quick. Same thing I just mentioned in ES. It's already done what I told you it would likely do. So here we have this gap in here. Now watch when I do the settings. See that? Right here. Look right here. There's no volume imbalance. Volume imbalance. That's the one I'm going to use. Actually, let me just do this. That's why I was highlighted that because there's a volume imbalance right down here. See the separation between that candle's close and that candle's open? We went right up to the high of it, and in that little gap in here, where were the bodies? I know there's a lot of business going on in here. Gotta put all this stuff back, otherwise the smaller time frame charts won't look right. The bodies are staying inside of that, but the wicks are allowed to go up and do the damage to that volume imbalance. See that? And then gave up the ghost. You heard that here first. So let's go back real quick, add all that detail, and go into the 1 minute chart. I already know I'm going to probably blow this, and it's going to move. Look at that. It came right back up to our little volume or fair value gap. The body stayed below halfway point and then ultimately went lower. This bit of business here, let me go back up. That wick right there, discount wick. We're above it here, trading down into it. We want to see it trade below on a closing basis. If we close below that, all bets are off. We're going lower for a while. That's that level I told you. I'll show you where the level was earlier. That's this level there. It traded down into it. And then once it hit that, look what it did. Right back up to that fair value gap that I gave you earlier at the beginning of the stream. Then we wilted, went lower, and now we're down here. So anyway, I will quickly want to go over here. That's the new day opening gap. There's two levels there. You can see they were on your own chart. Just want to go back here real quick. All right, so yesterday we had Wednesday's regular trading hours opening range gap. in this pink area. I know it's a whole lot of stuff on my chart, but the minor buy side liquidity pool here, price went up there. That would be a beautiful turtle soup, if you were looking at all that. And then once it traded in here, I was counseling you to watch this because if this was going to act as a inversion fair value gap, it would need to do certain things as I outlined in this lecture today. It needs to perform a certain function, and it didn't do those things. It didn't give any kind of validation of an inversion fair value gap. So it did just use it back and forth, and then ultimately went back to consequent encroachment of Wednesday's regular trading hours opening range gap, hit it, and then sold off. And then right in here, I told you to watch the 1013. Note that, okay? And it's a suspension block. The bodies were kept below halfway point, and then it was a short targeting that low, and I told you that we would look for 24,809. And then as it consolidated in here, I told you watch the rejection block here, and then here, and then ultimately it traded there. That was the end of it. Then it rode right on back up to the high of that 1013 gap, which is a reclaimed sell side and balance buy side efficiency. And then look, they used the consequent correction of it here, lower quadrant. And then we have Tuesday's regular trading hours opening range gap levels as well, factored in here. Used the low of it there, sold off. And then this is a level that I had watched yesterday, and I was framing that with the basis of the rejection blocks. In an ideal world, it would have been better for it to just wilt and go lower, but it came back against me, and that was the end of the run. So we got down finally into yesterday's afternoon session objective, and then went back up into that 1013 gap, and then ultimately rolled over and just started running for the fences using new day opening gap, new day opening gap, again new day opening gap, then the fair value gap that opened up the stream with, and that's the business there. So real quick, dirty end to a live stream that I already went over. I went over time. I really, really tried, but you're going to be mad at me because there isn't going to be any translation, and I apologize. Okay, I apologize. I think if you take my videos and you take the link and put them in like AI, and ask them to translate it for you, or even summarize them, and it'll spit out basically what I said, and many times in a summarized version. I know it's not the same. I apologize. Like I said, I'm trying, folks. I got out here with no script, and I'm organic about everything I say because I mean it from the heart, and I'm teaching by experience. If I sit down and I have a level of bullet points, okay, and if I just make a list of things, say, hey, I'm not doing the Berean study here where I do that. I actually have notes where I'm referring to scriptures and making specific points about something because I don't want to be incorrect. And sometimes over there, I've already made mistakes where I called something incorrectly. And then I had to go into the comment section and say, I made a mistake saying this. But here, because I'm trusting that you're not taking what I'm saying as investment advice and you're looking at the disclaimer that's in the bottom of this live stream in the description window, that disclaimer is important because it's a reminder that what we're talking about here is just price action. It's not investment advice. I'm not trying to inspire you to risk anything. But if you take what I've taught and what I talk about and comment on, hopefully you understand that what I'm really angling towards is protecting you from yourself, protecting you from the markets because they're extremely manipulated right now. Like, find somebody that's been trading longer than me. There's lots of people out there that's been trading longer than me. Find them and ask them what their honest opinion of what the market's conditions are right now. Ask them. If they're honest, they're going to tell you this is unprecedented. The volatility, the degree of, difficulty is astronomical. And any of these young guys or gals come out and they make up their little social media bullshit and they want to come out here and they want to parade around like it's the easiest time it's ever been, everyday trading bullshit, same guys that have no fucking ability to trade They talk out their ass. They do more talking about me than anything else. They are selling you something because if they are honest and they said trading's difficult right now, no one's buying their bullshit. No one's paying for their new house with a mortgage without furniture in it yet, sleeping on the fucking floor. Okay. No one's doing those types of things. But I want you to think about the motivation for me. The majority of the work I do is on X where I'm not monetized. It's immediate. It's like you're a friend or a family member and I'm texting you. That's how I treat it. So when I'm communicating something to you, it's important to me at the time. It's something about the marketplace that I think that your attention should be focused on. Or I'm reminding you, hey, now's not the time to do that silly shit. Focus or avoid this. This is trouble. Nobody in their right mind trades ahead of FOMC. Nobody does. A gambler does. You don't know what they're going to do. And they could have easily took the market up to take out the CPI 830 high as a two-stage delivery. It could have went up there, cleared it, and then went to where we're at now. That's kind of like what I was expecting. So in transparency, let's just say I got that part wrong. Because that's what I was looking for. I wanted to see them take CPI during FOMC. I wanted them to send it all the way up there and then rip it all the way right back down and be where we are right now today. Or lower, really. That's what I wanted to see. But I called all those things yesterday afternoon with the proper context. You'll see that I was on side. If they want to use this as an invert, that's an if then statement. So if that means if I think that that first gap that we were talking about, not first percent of fair value gap, if they're going to use that as an inversion fair value gap, it has to perform the functions that qualify and validate it as an inversion fair value gap. And it didn't do that yesterday. But then when things finally got obvious, 1013 candlestick, that suspension block, it was a bearish close. I said, note that. Then I said, look where the bodies are. They're in the lower half, looking for those sell side liquidity pools and the draw on liquidity to yesterday's target. And it went there. So what did you pay for? This year, how much money have you spent learning from me? How many times did you have to swipe the credit card to get me to talk to you and give you information? None. And you'll never have to do that. You'll never have to do that. I'm being constantly pitched every single day. I had 27 emails just yesterday from brokers, prop firms, lending institutions, and people in private sector that want to do a funded account type prop firm type thing with me. And it would be a 50 split. All I have to do is rep it. And I have no interest in any of that stuff. Never, ever, ever, ever. The books that I'm writing and putting out, you don't have to buy them. Everything everything I'm going to cover in those books is on this YouTube channel. You just have to dig through it and organize it on your own. The books are just kind of like a summary of do this, do that, do this, avoid this at these times, and that's it. You're all begging for something that you already have in your hands. All of you are begging to be part of a paid mentorship that I'm not running. I have no interest in that stuff. I have all the money I'll ever need. I will never run out of money. Okay. So I'm not motivated by the money. I'm not motivated by that. But I am motivated by someone that is encouraged and they get to see things that they otherwise would have never known or learned. Because if it is repackaged, rebranded bullshit, you'd find it somewhere else and you'd be out here doing it saying, here's what he's going to do. He's going to use this, this, this. This is where he uses that consequent encroachment or half of that wick. This is where he got that from. You don't find that anywhere. You don't have my PD arrays where I'm dividing that fair value gap in half. Go and look at Chris Laurie's bullshit. Yes, I went there. He never talked about that stuff. People that's been with him for a long time know that I have always been light years ahead of that stuff. But I made the mistake of trusting him and his character, and I gave him a nod in the industry. And that's why I don't talk about anybody else in the positive light anymore, because the true colors came out. I always said positive things until I saw people sending me emails where he's talking out both sides of his mouth. Bullshit. Come out here and call the market live. Come on, do it and execute too. Don't just say we're going to hypothetically say we're going to enter here and we're going to do it. Fuck that. That's not trading. That's not trading. That's not it. It gets old, man. Having to answer people constantly. What do you think about this person who said that about you? Why don't you just hang out with me? Why don't you hang out and just see if what the fuck I talk about happens? Just do that. That's all you got to do. That's all you have to do. Just hang out a little while. Stay quiet. Reserve your judgment. Just hang out for like a month and see what it is I'm teaching, what it is I'm explaining, and what I'm calling for in the marketplace. And then you tell me, what did you just witness? What do you keep seeing? Winning, being right, being accurate, analysis concepts that work, that none of you can go back and say, this is where he got that from. That's all I'm asking for. You get 5 million US dollars. I will come as long as I can drive there. I'm not going to fly anywhere. I will drive there. You can live stream me handing you the bank fucking check. Okay. And I'll get on my knees and kiss your rosy ass right in front of the entire world if you can do that. But you can't do that. This is a free trade for me. No stop required. None of you can do that. But these same individuals that talk out their ass that kind of stuff, there's so many new people coming to me all the time. And I know you guys have been around for a long time. You're like, dude, why do you even consider it? Because you're not getting inundated with thousands of emails a week, thousands and thousands of comments in every video I ever post. Is it true that you do this or do that? Are you teaching Wyckoff? Are you doing supply and demand? What's the difference between an order block and a supply and demand zone? My stuff works with rules. Those rules don't apply to supply and demand zones. I have levels. I have a function to determine real order flow. I don't need to look inside of a candlestick. I don't need to look at how many times an order was filled at a particular candlestick price. None of that shit is important to me. And for everyone that says that what I do is a complication, you're making an excuse for your ignorance and your lack of application, and you have no due diligence, or you're selling something. That's it. That's the truth. That is the absolute truth. And coming to me or saying my name or invoking the 3 letters ICT as a marketing thing is fucking suicide. It's suicide. Literally, it's suicide. You're literally asking for someone to just come over there and show you that you don't know what the fuck you're talking about, and no one's gonna buy your shit. They're gonna come over here and learn it for free, hang out for free, be part of a community that is uplifting each other. Sure, we get shots fired across the bow towards us, and we do the same thing. It's all shop talk. None of our feelings are getting hurt here. I'm not. I'm in a setting out there in X where everybody can touch me, handle me, say whatever you want to say. I'm not hiding from any of you because I know the truth. Look at these people that talk out their ass. 90% of them won't even at me. They'll use my name, but they won't at me because they know what's going to happen. I'm going to call their bullshit. But they want to look good and smart on the internet. They want to get some clout. They want to get some traction. Why is it they ignore everything that's being shown that you all witness? They can't tolerate it. They can't stand it. It's peak delusion for them to sit there and say, it isn't happening or he didn't do that. When every one of you see it. To me, it's madness. Sometimes, for most part, it's entertaining to me. But sometimes it's like, do these people have a mental illness? Like for the people that generally just don't have anything going for themselves, they're not selling anything, they're just brand new though, and they subscribe to that stuff without even doing any kind of research at all, watching. It's Like, I wanna sit down with them and say, "Look, what's wrong? Outside of trading, outside of the markets, like, what's wrong with you? What are you battling right now? You're going through something. You're toxic because you're hurting." And when I come out here and I talk to all of you and I try to encourage you, sometimes my sarcasm doesn't come across as clearly or obvious. Sometimes I'll say things that the language barrier between us doesn't communicate it effectively. And I'm trying to have dry humor. And my sense of humor isn't everybody's sense of humor. And maybe, maybe I'm not the best mentor in that regard because I don't have the best way of always articulating what it is I mean. Sometimes when I say something in a lecture, I'll think back, I think, I wish I would have said it this way. I wish I would have said it that way. And it's not me holding something back from you. It's just me learning to be a better teacher. And over the years, I believe that the Lord's allowed me to become better at doing it, but I still have to have my own personality in it. And that's the dad part. That's not the ICT. The ICT is that's a caricature. Okay. I use it to sprinkle in there because you all pay attention. And they made memes about it where you'll listen to me, the Mr. Rogers voice, real calm. I'm putting you to sleep. And all of a sudden I'll go on a rant because I know I'm going long winded and I know you're probably falling asleep. So I go in there and I do the Stone Cold Steve Austin, start ranting and raving, cussing and carrying on. And that gets you like, what in the world? And what does that do? It gets you talking. Yeah, you see that video where ICT does this, this. What are you doing? You're you're bringing traffic to me. You're bringing people here without me advertising. That's what ICT does. That is the face. That's the the flagship of the marketing. That's what that part is. But that is not me. I don't live that way. I don't act that way in life. I don't do those things. But it is a character I had to develop. And once I saw the success with it, I ran with it because everybody wants that Stone Cold Steve Austin. They want an action hero. They want a vigilante. They want the Rocky story. And that's all me using proper mindset and psychology and applying it to marketing. That's all it is. And for the older folks that are in my age bracket or higher, they may not appreciate something like that. They want to have the Mr. Rogers approach. Hey, look, come out here and let's talk about price action and let's not do all that silly stuff. I get it. I understand. But 2 million subscribers was because I know what I'm talking about and I know how to build a crowd. I know how to start a dumpster fire and I'm sitting here right there ready with the buckets of water to put it out and say, look, this was just to get your attention. Now that you're here, take a look at this stuff and how would this benefit you? You ever thought about price action like this? You ever looked at price action like this framework where it's less complicated? I'm giving you very specific rules for very specific levels. You don't have to apply everything. That part is your personality coming in. You get to pick what tools that you're going to use and you're going to stick to it. And the results that you get from that, that's your results. And they're not going to be perfect. They're not going to be everyday winning, but you're going to have progress. And that progress is going to allow and afford you new levels of understanding, new opportunities, and it's going to give you a baseline that you have to start with. And all of you are afraid to start and fail. And that failure in the beginning, they're all wonderful points to build on. Getting it wrong in the beginning, early stages of your career, that's exactly where all the best opportunities of learning come from. I learned all these things by the grace of God because of the hardships I was going through. None of these things came by way of easy. It was me going in there and seeing, what did I do wrong here? Look here. Why did I see that wrong? What did I interpret there incorrectly? Look here. That's how it happens. That's how it happens. You can believe it or not believe it. I don't care. But if there was somebody else walking in flesh around this world right now, alive or dead, that I learned this from, I would save myself a whole lot of grief and say, just go read this guy's book. Go do this guy's course. It'd be so easy to do that. But there's nobody else out there. I'm the brain trust. I'm it. And I'm not always the best ambassador with it. And that's one of the things I have to apologize to the Lord for all the time because I'm fallible. I'm still a man. And sometimes emotions, sometimes, you know, things that I went through that I'm trying to spare you from, I'm reliving those moments when I do those types of things. And the pain and the anguish, depression, that stuff's real. And in the beginning, you don't see that as a possibility for you. Otherwise, you wouldn't be doing anything with it. You'd be too afraid to be, I ain't going in there. But having it as a warning sign coming in, I pride myself on that because I, again, am talking to my kids, my biological children, and their children. That's who I'm talking to. The problem is, I have a balancing act where I have a community that wants to learn and be a part of that. And I've learned over the years that marketing myself through a caricature, inner circle trader, the uh, the bipolar, which I'm not bipolar. I've done apparently a really really good job of illustrating the caricature ICT being bipolar. I'm not bipolar, but I've done a good enough job to make you believe I am, and that's a compliment. I appreciate that. Thank you. In the beginning, it was rough around the edges, but today I look back and I was holding my grandson the other day, and I was thinking to myself, there's a time coming that he's going to listen to me going on and ranting, and I don't want him to listen to that and think that's cool. I want to be like Pop Pop and talk like that. Like it's losing its luster. And even though I have a big crowd and I know I can make a crowd bigger using all that stuff, I really don't like that part. Like I don't like it. And every single time I bring that character out, I always repent of it. Every single time. I can't stand it because that's what gets people's attention today. And the attention I'm getting is always in X spaces and following me on X where I'm not monetized. None of that stuff is making me money, but everybody else is making money off of what I'm doing when I do that. Nobody else is doing that in this industry. I don't want the money because I don't need the money. I want to teach. I love teaching. I want to see all of you do well. I don't want to see any of you get hurt. Above all, that's the first motivator. And I hurt myself a lot in the beginning and I caused a lot of hardship and I missed a lot of wonderful times in my personal life as a dad, as a husband, as a family member, as a friend. I completely isolated myself. And sure, I may be one of the smartest whips in the internet about price action. I might be. I might be among them, but that's nothing compared to what I lost outside of money. So that's why I talk to you the way I talk to you. It's easy to get wrapped up in the money. It's easy to get caught up in the success and pursuit of things, materialism, places, toys, bank account balances, trophies, all that stuff. When you have it and you look back and you think, I worried about getting here and I struggled and I cried, weeping and wanting it to be sooner and get here. And it's like, that's all there is. This is it. You think it's going to be a certain way. And once you get there, it's not. Now, I'm not trying to discount the idea of living comfortably and not having to get up and go to work and have someone tell you when you can't do and what you can't do, and this is all the money you're going to get for the time you give them. There's certainly a lot to be said about that. That's a blessing. But let's be honest, that's not why you're really trying to trade. You want the stuff. You want money. You want the things that money buys you because you love money. And that's why you're not able to succeed. If you pattern your learning with a vision and you put it to paper and you sign it, say, I'm going to learn how to do this and I'm going to be profitable because I want to afford to pay away for somebody that I love to be able to do something. It might be a house for someone in your family member. You know, they can't afford it. They're working, they're trying to do something to get their family together. Sit down and draw up a plan where over the next 12 to 18 months, you're going to work towards do a growth of an account that affords them the down payment on a house that they can afford to live in, and watch how easier it becomes because your motivation is not you. Your motivation is to bless somebody else. That's why I'm teaching it to you because I would have otherwise guarded it. I probably would have been disobedient because many times I wanted to. Many times I wanted to. When everybody started leaking the paid mentorship stuff and lectures that I didn't really ever really want to teach, I wanted to get real close to it, but not really teach it. But then when I started teaching it, it's on the internet for sale, and they're rebranding and relabeling it FU candles. There is no FU candle. Changing character. No. Lolly block. Oh man. It's some silly stuff that's happened over the years, but hey, you got to do what you got to do to get your meal ticket, right? Oh man, so many Telegram channels opened up, putting all my stuff out there, and I had to go on and on about how, man, you guys are you're you're jerks. You're trying to do that, and the only thing I was doing is putting my name out more and more, and you advertised for me. You didn't even see it coming, did you? But that's what this has all been. It's been strategic. Now I'm like a virus. I'm everywhere, but I'm the virus you want to have. You want to keep this fever because it's motivation. And by having that motivation, it will propel you into places that will afford you the means and opportunity to bless other people with it. I can appreciate a very nice car. I can appreciate a very nice home. And I can appreciate a well lived life. But I care to instill the idea of looking towards blessing other people. All of you influencers, and you're listening to this. You may not be listening to it live, but you're going to watch the video. Try using your influence to inspire other people, not to be materialistic, but to bless other people. I would love to challenge all of you, not because you want to get the clout for doing something nice for some other people, but just to try to change, do a little paradigm shift. Show yourself blessing other people. Sure, you're going to get that reward that way because you've shared it with other people, but inspire other people to do those types of things. All you guys that are getting your first payouts or getting payouts from your trading and withdrawals from live trading, take some of that and find somebody that you don't know and bless them with something. Grocery store is a perfect opportunity. Everything's so expensive right now. And I promise you, when you do it, it's going to feel real good. It's going to feel better than that win that you made in the money, the profit you just took out and it's down to your bank account. And you can spend it. It feels good, right? It's nothing compared to taking someone and surprising them. And they have no idea that it was coming. And to watch their face light up and think, wow, the timing of this is exactly a blessing that I needed it. I didn't want to say anything about it. Nobody else knew about it. But here you are, you're blessing me. and you pay for their groceries. You watch how that feels. When they grab a hold of you like they're mugging you and they hug you and they squeeze you and they thank you so much, that will motivate you. That will give you purpose in living. That will give you the context to say, you know what? I'm not going to risk on a stupid trade. I'm going to invest because there's somebody that I'm going to be able to bless. The next time I take a withdrawal, the next time I get a payout, the next time I take this money I'm making and it's in my hand, I'm going to find someone in need and I'm going to lay it in their hands and remind them that it's tough right now, but keep going. Trust it. Trust it. I promise you, not only will it make you feel better, it'll reward you in ways you don't know, but it's infectious. When you start talking about how good it felt to bless somebody like that, you're not going to want to do these materialistic pomp videos. You're not going to want to do those types of things. And the community will look at you and say, you know what? I remember a time when you did these types of things, but now look at you. Like this is inspirational. Like it's wholesome. And that's what the internet's lacking right now. Wholesomeness. Everybody's going through it right now. Everyone is going through it. Things cost too much. Stress is out there. Yin yang. And what do you think is going to happen when you become a conduit to bless other people with your growth, with your fruits, your profits? Some of you are thinking, ain't no way I'd do that. They wouldn't do it for me, so I ain't doing it for them. And that's why you're going to stay broke. Sure, you might make money here and there, but you're going to ultimately live broke. You want to live a really, really successful life? Be charitable, be generous when you do it, and don't ask for anything or expect anything in return. I don't expect thank you. It's nice when it happens, but when you do things like this for other people and they grab a hold of you, and I'm telling you, it is admittedly it's uncomfortable the first few times because you're like, you know, they're grabbing you up and they're hugging you and they're squeezing you and thanking you, and sometimes they'll kiss you on your cheek and whatnot, and they go crazy because you showed up like an angel in a moment when they probably were in prayer quietly. And here you are presenting yourself in the highest form of a servant, something that you labored over, you cared about, you managed the risk of, and now you're blessing somebody else with that. That's success.